Are retail bulls blindly buying the dip, or did Wall Street just engineer a massive liquidity trap right before the weekend? Welcome back to Dollar Key. Today, a sudden wave of hawkish Federal Reserve commentary sent shockwaves through the tech sector, triggering a violent midday sell-off that completely wiped out the morning's gains. If you were aggressively long on the Nasdaq today, you got caught off guard. Let's break down exactly what happened, the top 10 stories that actively moved your portfolio, and where the smart money is positioning for tomorrow's session. Let's get into the data. The Index Report. Here is the exact breakdown of how we closed out Thursday, May 21st. The S&P 500 failed to hold critical support, closing down 0.6% at 5,285.40. The Nasdaq Composite took a heavy beating, dropping a sharp 1.1% to close at 16,510.30. Meanwhile, the Dow Jones Industrial Average barely survived in the green, inching up 0.1% to 39,950.20. The why behind this divergence is clear. Robust labor data combined with aggressive Fed rhetoric forced bond yields higher, causing institutions to dump high multiple tech stocks and rotate capital into defensive blue chips. Top 10 financial news of the day. Here are the top 10 macro and corporate stories that dictated market direction today. Number 1. The Fed's hawkish morning. What happened? Two regional Fed presidents explicitly stated that interest rates may need to remain at current levels well into 2027 to combat sticky services inflation. The impact: rate cut optimism evaporated instantly. The 10-year Treasury yield spiked back above 4.5%, directly triggering the algorithmic sell-off in equities. Number 2. Nvidia's supply chain jitters. What happened? Unconfirmed reports surfaced regarding minor production bottlenecks for Nvidia's next-generation Blackwell chips. The impact: while the company hasn't commented, the mere rumor caused a swift 2.5% intraday drop, dragging the entire semiconductor sector down with it. Number 3. Target's margin warming. What happened? Target reported earnings that beat on revenue, but issued a harsh warning on shrinking profit margins due to rising freight costs and theft. The impact: this signals severe weakness in the U.S. consumer's purchasing power, dragging down the broader retail sector. Number 4. Initial jobless claims plunged. What happened? Weekly jobless claims came in significantly lower than expected, at just 208,000. The impact: a hot labor market means the economy is running too strong for the Fed to justify rate cuts. Good news for the economy became bad news for the stock market. Number 5. Apple faces Chinese regulatory hurdles. What happened? Reports indicate Apple's highly anticipated AI software rollout is facing unexpected regulatory pushback in China. The impact: Apple shares slid to major technical support. China remains a massive growth vector, and any delay there spooks institutional investors. Number 6. Crude oil slips on inventory build. What happened? WTI crude dropped below $75 a barrel after a surprise buildup in U.S. commercial crude inventories. The impact: this crushed energy stocks today, but it is a silver lining for the broader market, as falling energy prices help cool headline inflation. Number 7. Tesla fights the trend. What happened? Tesla announced a new, highly favorable lithium supply agreement, securing raw materials at a massive discount. The impact: Tesla was one of the few bright spots in the megacap space today, showing relative strength and catching bids while the rest of the market sold off. Number 8. Commercial real estate fears return. What happened? A prominent mid-sized regional bank heavily increased its reserves for commercial real estate loan losses. The impact: the KRE regional banking ETF took a hit. The silent commercial real estate crisis is still simmering beneath the surface. Number 9. Bitcoin flash crash. What happened? Bitcoin suffered a rapid 4% flash crash, dropping below the 64,000 level in tandem with the Nasdaq sell-off. The impact: risk-off sentiment is spreading from equities into crypto. institutions are de-risking across all speculative assets. Number 10. VIX wakes up. What happened? The volatility index spiked nearly 6% intraday before settling slightly lower by the close. The impact? Options premiums are getting expensive again. Wall Street is actively buying put protection as uncertainty creeps back into the market structure.
Trading insights and market structure. Let's cut through the noise and look at the market structure. Where's the smart money leaving their footprints? Looking at the S&P 500, today's price action was a textbook liquidity sweep. We pushed up in the morning to fill a lingering fair value gap from Tuesday, instantly rejected it, and then aggressively flushed to the downside to sweep the sell-side liquidity resting below yesterday's lows. We closed right on top of a major 4-hour bullish order block. If we lose 5,270 tomorrow, the trapdoor opens. If the bulls defend this order block, expect a violent short squeeze back above 5,300. For stocks in play, keep a close eye on Tesla. While the broader market was dumping, Tesla printed a massive bullish divergence. It broke local market structure to the upside on high relative volume. The smart money is clearly accumulating here. Watch for a retracement into the newly formed demand zone near $178 for a potential high probability entry. As we gear up for the final trading session of the week, here are the 2 critical catalysts you need on your Friday watch list. Flash PMI data. Friday morning, we get the Purchasing Managers Index. This will give us a real-time pulse on manufacturing and services. A hot number will only fuel the Fed's higher for longer narrative. Options expiration. Tomorrow is a major options expiry. Expect heavy chop and erratic swings in the final hour of trading as market makers pin prices and roll over their delta hedges. That is your Dollar Key Market Wrap. Now, I want to hear from you. After today's hawkish shock and technical breakdown, are you buying this dip, or are you sitting in cash waiting for lower prices? Let me know your exact sentiment down in the comments. Are you bullish or bearish going into Friday? Make sure to hit subscribe, turn on notifications, and trade safe. See you in the next session.